Hello, I wanted to thank you for joining me on this episode of Doing Insurance Right. My name is Scott Jenkins, your host. I'm a local farmers insurance agency owner here in Phoenix, Arizona. And today I kind of wanted to just talk about life insurance, some general misconceptions and some things going wrong. I've probably had, probably 4 or 5 life insurance appointments here in the last couple weeks. And I just wanted to go over maybe a couple big misconceptions I've probably heard from almost everybody. And I just wanted to kind of run through those. So one of the first ones I wanted to go through was if you're over the age of 18, just expect to have what they call a medical exam, blood and urine drawn. If you have major things against blood being drawn, then please let me know. There are maybe an alternative to that. But most of the time we are going to have a medical, blood, and urine drawn with no exceptions when it comes to life insurance, unless it's a minor, and then there is no medical, blood, or urine required. So if we start somebody under the age of 18 on a life insurance program, that is the case on that. So that's going to be one of the misconceptions. The second one that I heard quite a bit, so if I sign up, if something happened to me like the first month, they're not going to pay out, are they? They're not going to pay out. Well, yes, they are. I mean, the thing that the life insurance company, whether it's Farmers or another company, it's the law of large numbers, just like everything else. So let me ask you this. When you buy in car insurance, and let's say you got in an accident the next day, would you expect the insurance company to pay? Of course you would, right? Because why? You paid your premium. It's the same thing with life insurance. Now, if it's a month in or 2 days in, is there going to be a little bit larger investigation? Yes, there is. Obviously, that doesn't happen very often. When that does occur, if you're healthy and then all of a sudden die, like 2 days in, obviously that's going to be that's kind of a very unique circumstance. Unless it was a car accident or something to that effect, or that things like that do happen, but they are going to pay. So don't think just because you've only made 1 month's worth of premiums that if something happened, then they're not going to take care of your family if you met every other obligation. That's part of the contract. It's just like if you make car insurance, it's just like if you have homeowners insurance, any of those types of things, it's a similar type contract. It's going to pay, that will pay out. For a normal, healthy person, if we're writing a normal, healthy person life insurance contract, okay, let's say you're 35 years old, you have, you just had your first baby, and, obviously we just started thinking about life insurance because that's typically when we do is when we have kids. All of a sudden, something happened to you on a train where it derailed and you were killed. Yes, they're going to pay out on that if you had life insurance in force and the premiums have been paid. That's what it's there for. It's the same thing if you had a car accident, same thing on a homeowner. Let's say, a tornado came through and destroyed your house and you'd only been with that insurance company for a month. Guess what? They're going to pay. It's the law of large numbers. They did not get into the insurance business, right, to only have one customer. If they did, they lose their shirt, right? It's the same thing. So it's the law of large numbers when it comes to life insurance. So yes, if you sign up, you're approved and your premiums are paid, they will pay. Now, there are some exceptions when it comes to that. We do have policies that are meant for, if you're a little bit older in life, that maybe you have to, go 2 years before they're fully funded, because you've purchased these a lot longer, maybe for burial expenses or whatever it may be. But for your typical, if you're under the age of 65 and we've done life insurance, unless we've stated something ahead of time, that's the kind of life insurance we're getting. And trust me, I'm very clear if we bought a policy that is not that case. The next thing I want to go over is a lot of people are talking about maybe a lot of financial experts say maybe like buying term versus permanent insurance. So term, maybe a 20-year term, 30-year term versus permanent insurance, or some version of permanent insurance, and then investing the rest. There is no wrong. I believe you can go a lot of different ways when it comes to life insurance. Here's what I do know. Permanent insurance means guaranteed death benefit. Remember, guaranteed, because you will die at some point. Right? We all know this, right? We're all going to pass away. Unfortunately, we can't live forever. Okay. So it is guaranteed as long as we pay our premiums. right? Term is not guaranteed. If we do not pass away during that time of, let's say, 10, 20, 30 years or whatever we designated for the term, or we have not continued to pay the premiums outside of that window, then it's not guaranteed death benefit. It was in case something majorly catastrophic happened during that time. Term is a lot cheaper. And the reason why you buy term is so you can invest the rest of the money. A permanent life insurance policy is going to force you to invest money along with the term investment, basically. So you're still paying for life insurance, but a permanent policy forces you to invest, where a term does not. So the difference being the dollar amount between them is the investment difference. So if you are what I would call good at taking care of your money and investing it on your own and making sure it's solid, then probably term is the way to go for you. But if you're not, and trust me, there's a lot of people out there that are not, right? Then permanent's probably the best way to go for you to build some actual growth for your investment portfolio. There are a lot of rich people out there when a lot of their portfolio becomes from cash value from life insurance. Why? Because a lot of it, I can guarantee it, where there's no decline at all. Not only that, I can put you in the stock market with a fund that has a floor of 0% and a gain rate is 9. Who wouldn't want to have an opportunity to make 9% in a year with no chance of loss, right? I mean, how much is your savings account making right now? Still nothing, right? But a lot of people dump money into their savings with no hope of growth. So if you had an opportunity on something you're going to purchase anyway, like life insurance, right? Because you need to protect your loved ones. And I can show you a way to maybe make up to 9%. Now, some years it's not, let's be honest. Some years the S&P or the Russell has lost money. And in those years, guess what? You didn't make any money. You earned 0% on your investment. But there's some years that it makes 5. Some years it's made 15. But you are guaranteed to go the floor of 0% and a growth rate right now of capped at 9%. So if you take a look at the last 20 years, just for an example, the S&P, if you average the last 20 years out, has made 4%. On the farmers product, where we basically we match the index every year, with that 0 and 9% cap, you'd actually made a little over 5% over the last 20 years. A lot of people wish they were in that boat, right? 5% over the last 20 years, pretty good deal. So, and a lot of other financial experts, the reason why they don't pick permanent or whole insurance is because they're not basing it on the correct products. They're basing it on the old school whole insurance, which basically didn't leave a lot of room for cash growth, right? Because the cost of life insurance gets more and more expensive the older and older you get, and they're basing it off of that product that didn't have a lot of dollar growth. Well, of course, why would you spend 3 times as much for life insurance for the same policy and not have any cash benefit, not have as much cash benefit? Of course that. So of course the financial expert's gonna tell you to spend it on that. I do not wanna spend your money and put it in a bad place. That's not what I'm here for. I am trying to make sure you get all the coverage you need for the least amount for it, but to make sure it's covered correctly. So that's just something to keep in mind on that one. Not every financial expert that stands out there is in your shoes. They're already, more than likely, if they're a financial expert, here's what they are: rich. Are you? Am I? No. So maybe, they have money right now. They don't need to sit there and buy anything else besides term insurance. Maybe they need help investing. So just something to keep in mind when it comes to that as well. I want to thank you for joining me on this episode of Doing Insurance Right. As always, if you could rate, review, or subscribe to this podcast, I would greatly appreciate it, as it does help this podcast grow. Whatever platform you're listening on to, whether it be Google, Apple, Spotify, Stitcher, Pandora, iHeartRadio, and all the rest that we love and adore. And thank you. And I look forward to seeing you on the next episode.